What is going on, everybody, and welcome back to yet another video. In today's video, I'm going to be showing you guys one of my favorite futures trading strategies. But real quick, before we hop into the video, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Alrighty, so hopping right into it. Like I said, this is one of my favorite futures trading strategies. Now, for me personally, I like to trade futures before the market opens. So as the market opens at 9:30, I'm more than likely going to be trading SPY options instead. But before 9:30, if I do see this setup, I will end up taking it. Now, the setup is very basic. The very first thing that I want to do is look for an area of liquidity. I have a video on my channel. I will link that down in the description. I'll talk a little bit about liquidity here in this video, but in that video, I go over how to identify these areas of interest and what to look for liquidity. So if we're looking at the 5-minute chart right here, pretty much all we're going to do is look for previous highs and lows. So here's a previous high point, here's a previous low point, right? As price is trading in this range, we're looking for price to either break above this high right here or break below this low right here. These areas are then going to spark interest in traders either looking to go long above this high or looking to go short below this low. Now, also, there are going to be stop loss orders sitting below these lows. Say people ended up getting long right here, maybe they even got long over here. Where do you think their stop loss is going to be? Right below this low. People who are getting short, maybe right here or even here, where their stop loss is more than likely going to be right up here. So not only do we have stop loss orders sitting above and below these areas, but if price breaks below this level, that's going to make people want to go short, and their stop loss is going to be a break and reclaim back above this level. Same thing over here. If price were to break above this high, there's more than likely traders who are going to look to be going long and capture a move to the upside. So where their stop loss is going to be, more than likely right back below these lows. So what we're going to be looking for is for price to either break above the high or break below the low. Again, stopping traders out of their previous position, tricking other traders to either get short or long. And then we are watching for them to get squeezed out of the market and become liquidity. So today, this is actually a very good example. You can see price broke below this low and immediately started reclaiming it, stopping out people who were long over here, also stopping out people who went short right here. As it starts reclaiming in this scenario, this 4295.5, you can see price had a very strong, aggressive move to the upside. Now, what we are looking for from there is for price to either come back and retest the level, which it did right here, or sometimes there will be a nice fair value gap that you can then look to go long. In today's scenario, you can see that the fair value gap never provided an entry before it started breaking below, but price did come down, set this doji right here, retested the level, which then set up for a high probability long with a stop loss right below this low. And as you can see, if you were to just go long at the end of this 5-minute candle right here at 4296.5, price traveled all the way up to around 43.17 from that area. Now, also keep in mind, this does not happen every single day. So actually, here's another really good example. So as we can see over here, price just consolidates in this range right here. Well, we have this overnight low right here if you wanted to use that, or maybe this low over here. Personally, I would use that overnight low as a pre-market low. But if we go and we mark this low right here, we can see actually during the market open, again, it really depends on if you want to trade futures during the market open. For me personally, I would have traded SPY calls at this point. But if you're strictly a futures trader, you could have traded ES in this scenario. So we have this overnight low, price moves off the level, it comes back and it breaks below the level, but then reclaims it. There's different ways that we can reclaim this level. We could slightly trade below the area and then reclaim it with a very strong aggressive candle, or it could just be a very quick spike below and then reclaim the level as well. From there, you can see price had a really strong aggressive move to the upside, came back down, set that higher low, and then continued to have a nice explosive move to the upside. And real quick, if you haven't already and you're wanting to learn more about my overall day trading strategy, I highly suggest you check out my new book, The New Age of Day Trading, the Ultimate A through Z Trading Guide. I go over my entire day trading strategy, all the indicators I use, a lot about Fibonacci retracements, specific strategies I use for SPY, QQQ, SPX, ES, NQ, sniper entries, stop loss strategies, and so much more. So again, I highly suggest checking out my new book, The New Age of Day Trading, the Ultimate A through Z Trading Guide, officially on Amazon. The link will be down in the description. There's another really good example. So we ended up having 10 o'clock news right here. Again, just marking a high and low. This was during market hours. For me personally, I would be trading SPY options, but again, if you solely trade futures, you could have just traded ES based off of this move. But we have this high point right up here based off that 10 o'clock news. Price then makes a strong aggressive move to the upside. Then later in the day, price comes up, and what does it do? Tries to break above the level, stopping people out. Maybe it fakes some people going in long because we broke above high day, reclaim the opposite side on heavy selling volume right here, and it came back up, retested the level yet again, which you could have gotten short with a stop loss right above this high. And as you can see, we saw a nice end of day sell off to the downside. And then real quick, here's one more example. Looking at the overnight low at around 210, you can see that we have this low point right here. What did price do? Broke below the level. If anybody's long, where's their stop? Right below here. Price breaks below, stopping them out. Also, people are going to try to short at the new low. Price reclaims the level, now stopping out the people who tried to short, comes back, retests the level. You could have gone long with a stop loss right below this low. And as you can see, price had a nice explosive move to the upside for the remainder of the day off of that level. So again, when I am trading futures, besides Fibonacci retracements, this is going to be my go-to strategy. For me personally, I like to trade futures before the market opens and then trade SPY options as the market is open. But of course, if you're somebody who trades futures all day, you can just trade ES and trade this strategy whenever you want. I'll just trade the SPY options later in the day if this were to end up happening. But pretty much to break it down, all I'm doing is marking 5-minute lows or 5-minute highs. You can see there was a very nice one right here in the morning. Nice 5-minute high, price broke above it, failed to hold above. Liquidity sweep, rejected the level, and then had a very strong sell-off, grabbed liquidity down here, and then made the move back up. So I'm marking these 5-minute highs and lows, and I'm seeing if price tries to break the level, but then fails to break and hold the level. If it fails to break and hold, that sets up for a high probability trade in the opposite direction. You don't want to be that person that's buying the new low. You actually want to be looking for noob traders to try to buy the new low or try to buy the new high. And if price were to fail, again, that sets up for a high probability trade in the opposite direction. But that is going to wrap up this video on one of my favorite futures trading strategies. If you would like to see more futures videos, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.